Good day, Junior Tikkies. We're now going to look at activity 5. True or false? Read each statement carefully and indicate if true or false. If false, provide a reason. So you need to provide a reason to make the statement true. Liabilities equals assets minus owner's equity on the accounting equation. This is false. Liabilities equals assets plus owner's equity. Number 2, all income will have a negative effect on the owner's equity. This is false because all income will have a positive effect. All expenses will have a negative effect. The third one, debit entries are made on the right-hand side of an account. It is important to understand a T account has a debit side, which is called the left-hand side, and a credit side, which is called the right-hand side of the T account. So this is going to be false. This is made on the left-hand side, all debit entries. Number 4, a transaction will always have 2 accounts involved. This is true. This is called the double entry principle. There are 2 accounts involved, and for every debit, there is a credit. If we look at question number 2, FH Plumbers, identify each account under the headings provided as assets, owner's equity, liabilities to show the effect on the accounting equation. Indicate an increase with a plus before the amount and a decrease with a minus. Calculate the totals at the end. So if we read through this scenario so that we are able to answer the questions, it says, Mr. Jones decided to start his own plumbing business on the 1st of March 2023. That will be the beginning of the accounting period. Reminder, an accounting period is 12 months. He withdrew 100,000 from his own personal account to invest into his own business, FH Plumbers. Reminder, when you start your own business, you use your personal money and you put it into your own business as an investment. So Mr. Jones does not have enough money and approached FNB Bank for a loan. FNB granted Mr. Jones a loan of 150,000. This loan will be paid over a period of 4 years. The money was paid into the business current bank account. Because when you start your own business, you need capital. So you can either use your own money, and if you don't have enough of your own money, you can approach a financial institution like a bank and you can borrow money. So this is what is happening here. Mr. Jones bought standard plumbing tools, which includes plungers, hacksaws, cutters, pliers, wrenches, etc., valued at 18,000. He also purchased a second-hand bakkie worth 110,000. At the end of the accounting period on 29th February 2024, the business had the following income and expenses. So this is at the end of the accounting period. Remember, the start of the accounting period started on the 1st of March 2023, and 12 months later, it ended on 29th February 2024. So he had the following income and expenses: fee income, salaries and wages, stationery, telephone, fuel, consumable stores. He also had 16,380 in the current bank account. He took 15,000 cash per month for his own personal expenses. The total amount paid towards the loan at FNB amounted to 37,500. So this is what he paid towards the loan at the end of the accounting period, or by the end of the accounting period. So we now need to look at all of that information, and we need to classify or sort them out into assets, owner's equity, and liabilities. So starting from the beginning, we need to look at which of these is going to be under assets, owner's equity, and liabilities. And you need to identify the business account name. So we start off with, he withdrew 100,000 from his own personal account to invest that into the business. This will be his capital contribution, which will increase his owner's equity with 100,000. Then he needed to take out a loan, and he was granted a loan. So that money was paid into the business bank account. So that loan is a liability which he owes FNB. So the business account name would be loan FNB, and that will increase his debt with 150,000. Then it says he had to purchase standard plumbing tools. Those tools, we're not going to list them each separately. This will all be regarded as equipment, and the total cost of that was 18,000. So our assets is going to increase with 18,000. Then he also purchased a second-hand bakkie. That bakkie is a vehicle which is regarded as an asset, so our assets would have increased with 110,000. Remember, we are just showing each one of these under assets, owner's equity, and liabilities. And we need to indicate, will that increase or decrease our assets, owner's equity, and liabilities. At the end of the accounting period, he had the following income and expenses. Income and expenses influence our owner's equity. So our income, which will be fee income, will have a positive effect on the owner's equity. Then we had salaries and wages. All expenses will have a negative effect on the owner's equity. That's why we're saying minus. So we've got salaries and wages, stationery, telephone, fuel, 26,700, consumable stores, 25,120, and that will all have a negative effect on our owner's equity. He also had 16,380 in his current bank account. So that's how much money he's got. That means that it will go under assets. It's a current asset plus 16,380. Then it says he took 15,000 cash per month for his own personal expenses. Anything that's taken for personal expenses must be shown as drawings. So by the end of the accounting period, which is 12 months, it means he had total drawings of minus 180,000. Why minus? It will have a negative effect on the owner's equity. So here we needed to calculate the total drawings for the entire year. Then it says the total amount paid towards the loan was 37,500, which means that will decrease our loan with minus 37,500. So if you also alternatively want to show this, you could say 150,000 is how much we've borrowed minus how much we've paid back, and that will equal 112,500, which is still owed to FNB Bank. So my total assets equals total owner's equity plus our liabilities. If I add those two together, it must equal my total assets. So question number 2 says, did FH Plumbers make a profit or a loss at the end of the accounting period? Use the figures or calculations to support your answer. So now we need to go back to what we've already sorted out. So all we need to look now at is what was our total income minus what was our total expenses. And that means that the business income minus expenses made a profit of 111,880. So again, we needed to look at all our income minus all our expenses so that we can determine if the business made a profit or a loss. If our income exceeds our expenses, it means that the business made a profit. Now, the next question says, the owner's net worth change at the end of the year compared to the beginning of the year. So in the beginning of the year, the business had owner's equity, 100,000. Their assets was 250,000. Liabilities was 150,000. So that is their net worth. By the end of the accounting period, which is on the 29th of February 2024, we now need to calculate their new net worth, which means that if I look at my owner's equity, the total, we've calculated 51,880. Our total assets, 144,380, minus our total liabilities. Assets minus liabilities equals our net worth. So now we need to comment on this. And another way to calculate your net worth is what is our capital balance in the beginning? Our capital balance was 100,000 plus our net profit, which we've calculated 111,818, minus our total drawings, which we've calculated 180,000. And that equals our capital balance at the end, which is exactly the same which we've calculated in there. So now we need to comment on this. And when we comment on this, we need to use the figures which we've calculated. So if we look at his net worth, what happened with his net worth? In the beginning, it was 100,000 and now it is 31,880. That means it decreased by 68,120. And this is how you need to quote figures in commenting. Use the figures which you've calculated. The business made a profit of 111,880. But the owner took 180,000 in cash for personal use. That's why you would find that our capital balance in the beginning was much higher than our capital balance at the end. So this illustrates, yes, the business made a profit, but the more the owner takes from the business, that will decrease the owner's equity. It will decrease the capital balance which he has in the business. So now the next part of the question is we need to give advice. We've seen now that the owner has taken much from the business and is entitled to take from the business. So when we give advice, we need to say, although the owner is entitled to drawings, he should take less drawings from the business until the business is able to generate more profits. So when the business generates more and more and more profits, then the owner can take more money from the business. Because remember, at the end, you've put an investment into your own business and you also want your business to grow. So the more you take from the business and take from it, the less the business is going to be able to grow. Thank you very much. I want to leave you with this quote. It is often the small steps, not the giant leaps, that brings about the most lasting change. I hope you have a wonderful day.